All right. Good afternoon or good morning, depending on when you're watching this. Thank you so much for joining us today. My name is Michael Mandelos, and I am the Director of National Accounts here at Miller Howard Investments. I'm joined today by my colleague Adam Fackler, who is one of the portfolio managers on the investment team. Adam is responsible for our infrastructure portfolio as well as our Utilities Plus portfolio. So Adam, thank you for joining us. How you doing today?
Hey, Mike. Happy to be here.
All right, great. So Adam, over the last couple of years, we've talked quite a bit about the growth of renewable energy, and more specifically, we've talked about utility scale renewable energy. And recently, there's been some, interesting points given kind of the growth of renewables. Can you tell us what you and the portfolio managers are seeing in the space?
Yeah, sure. The proliferation of renewables has long been a point of interest with our investors, and at this point, the trend is really undeniable. Earlier this year, the EIA projected electricity generation from renewables would surpass coal in the coming years. That inflection point really has seemed pretty inevitable since last April, when monthly power gen from renewables surpassed coal for the first time. Although in all fairness, that was due in part to some seasonality. It's also worth pointing out that last year, total U.S. energy consumption from renewable sources exceeded coal. And, taking a little longer view, the EIA also estimates that nearly 75% of U.S. power gen will be from a combination of cleaner burning natural gas and renewables by 2050. To reach that threshold, renewables will essentially double their share. That's largely at the expense of coal, which has been declining for most of the last decade. So the bottom line is the coal to natural gas and renewable switch still has a lot of runway and is going to be a significant growth opportunity for utilities.
All right, that's interesting. Let's dive a little deeper. Can you talk a little bit about what's driving this growth? Is it the utilities themselves that are driving the growth, or is it more of a kind of a grassroots demand push?
Yeah, no, it's really a bit of a combination, Mike. The growth trajectory is reinforced by public opinion, regulatory support, which is clearly important. So right now we have 26 states that have greenhouse gas emission targets. Those states make up, roughly 65% of the U.S. population. We have 29 states that have adopted a renewable portfolio standard. We have 11 states that have 100% clean energy goal or mandate. And a lot of those are long-term targets, typically ranging, in years from 2040 to 2050. And, while the commitment levels and timetables vary, we think that, in aggregate, these initiatives are going to provide a tailwind for the utility space.
Okay, so that all sounds promising, like a promising growth trajectory. Given the set of opportunities available to utilities today, how do you think the capital is going to be deployed? And more importantly, as I was listening to you, I couldn't help but think I just paid my electric bill, and the financial advisors who were listening to this probably just paid their electric bill. I'm hearing your thoughts. I'm wondering to myself, are we going to see a huge increase as the utilities add new investments? Are our clients going to see a huge increase in their electric bill?
Yeah, no, I mean, it goes without saying that the second part of your question resonates with a lot of us. To your point, clearly this transition will require significant capital deployment. And, as a result, utilities will have to balance that development against the impact on consumer bills. As a reminder, in the utility model, rate-based growth puts upward pressure on consumer costs. But at the end of the day, a deep bench of growth opportunities is still an enviable position for any utility to be in. And we expect this to be a multi-year, perhaps multi-decade growth story.
All right, great. Adam, I appreciate you walking us through this today. It's really important for us to get the message out about this growth trend for utilities. I would encourage the financial advisors who want to learn more about our outlook for utilities to go back and read our most recent quarterly report. You can always find more about Miller Howard and our people and our process and our strategies on our website. That's at www.mhinvest.com. You can also always reach our Miller Howard sales professionals at 845-679-9166. That's our home office line. I would also encourage you to follow us on Twitter and LinkedIn. We're constantly partnering with our marketing team as well as our portfolio managers to bring a lot of our value add content to you as quickly as possible. So I would encourage you to follow us on those mediums. So Adam, again, thanks so much for joining us today, and look forward to speaking to you again soon.
All right, thanks.
All right, thank you. See you later.